As we head into the new trading week, the market is closed for the weekend. This is Sunday, November 9, 2025. The focus for anyone holding shares of BigBear.ai Holdings, Inc., ticker symbol BBAI, is squarely on the after-hours session from this past Friday. The stock closed at $5.67, finishing a volatile day that saw it trade between a low of $5.29 and a high of $5.72, ultimately ending the session up a marginal 0.18%. But this small, quiet close is deceptive. It is the calm before a potential storm, as the entire market for this stock is holding its breath. The single most important event for the company in months is scheduled for tomorrow, Monday, November 10, when BigBear.ai is set to report its third quarter 2025 financial results. This isn't just another earnings report. It is a prove-it moment that could define the stock's trajectory for the next year and will almost certainly resolve the brutal tug-of-war we've seen between long-term bulls and a very committed group of short sellers. The general expectation for BBAI is, and has always been, that it's a high-growth, small-cap proxy for the AI defense sector. Investors look at its low price, its high-profile government contracts, and its AI-centric name, and they see the potential for a 10-bagger, the next Palantir. The hope is that one massive contract announcement is all it will take to send this stock into the double digits and keep it there. The reality, however, is far more complex and, frankly, more difficult. The reality is that BigBear.ai is in the middle of a painful and expensive turnaround, trying to digest a major acquisition, Penguin, while simultaneously dealing with the disruption and loss of revenue from its core U.S. Army programs, which was the primary driver for its disappointing second quarter revenue miss. The stock's violent swings, like the drop from over $8.50 in mid-October to these current levels, are not random. They are the footprint of a market deeply divided on whether this turnaround is working. Tomorrow's earnings report is the moment of truth. This intense division is perfectly captured by the stock's short interest. This is a critical piece of the puzzle that many retail investors misunderstand. The expectation is that because the short interest is high, a squeeze is inevitable. The latest data shows that a very significant 17.68% of BBAI's entire float is sold short. For comparison, the average for its peers is closer to 6%. This means for every 5 shares available to trade, nearly 1 is a bet that the price will go down. This is where the retail narrative of a coiled spring is born, hoping for a repeat of other meme stock sagas. But the reality of the data tells a different, more nuanced story. When you look deeper, the borrow fee shares of BBAI are currently very low, listed at just 0.57%. This is not the sign of a panicking short seller base. It means it is cheap and easy for institutional bears to hold their negative bets. Furthermore, the days to cover, a metric that estimates how long it would take all short sellers to buy back their shares, is exceptionally low, at just 1 to 1.15 days. Why? Because BBAI's average trading volume is massive, often exceeding 130 million shares. This completely changes the dynamic. It means that if there is good news and shorts decide to close their positions, they can all get out in a single trading day without causing the explosive multi-day squeeze that many are banking on. This isn't a signal of a guaranteed squeeze. It's a signal of a deep, fundamental disagreement. The bears are not over-leveraged and trapped. They are placing a calculated bet that tomorrow's earnings will confirm their thesis that BigBear.ai's revenue is lumpy, its path to profitability is too long, and its competition is too stiff. For anyone trying to navigate this, here is the actionable insight. You must look beyond the high short interest percentage. You can find this data on platforms like Fintel or Ortex. Look at the borrow fee rate and the days to cover. A high short interest combined with a high borrow rate and high days to cover is the real fuel for a squeeze. A high short interest with a low borrow rate and low days to cover, which is what we see in BBAI, is a much more dangerous setup. It's a genuine bearish bet from institutional money, and tomorrow's earnings will be the catalyst that proves either them or the bulls catastrophically wrong. What are you watching for in tomorrow's earnings report? Revenue growth or the short interest number? Comment below. So let's set the stage for this report. The entire bull case hinges on a few key points. First, the successful integration and revenue contribution from the Pangiam acquisition. The new CEO, Kevin McAleenan, the former head of the Department of Homeland Security, was the chief of Pangiam. His appointment is the market's great hope that he can use his connections to unlock a massive pipeline of government contracts. We've already seen positive signs, like the deployment of BigBear's biometric systems at Chicago O'Hare International Airport. Bulls need to see this translating into hard dollars on the balance sheet now. Second, bulls are watching for commentary on new defense initiatives like the U.S. Navy's Fourth Fleet using their technology at the UNITAS 2025 maritime exercises. They're looking for any sign that the company is successfully diversifying away from the Army contracts that hurt them so badly in the second quarter. The company's biggest advantage, and the reason the bears haven't been more aggressive, is its balance sheet. As of the end of the second quarter, BigBear.ai was sitting on a massive cash pile of over $390 million. This is their armor. This cash, raised through various financing and warrant exercises, gives them a multi-year runway to execute their plan. It means they are not at risk of bankruptcy and do not need to desperately raise capital, which gives them leverage in negotiations. However, the bear case is that this cash pile is the only thing keeping the stock afloat. The company's own 2025 guidance, affirmed after Q2, was for revenue between $160 and $180 million, with a negative single-digit adjusted EBITDA. This means they are still burning cash, even if they have a lot of it. The bears will be listening tomorrow for any acceleration in that cash burn or any sign that the new contracts are at a lower margin. This brings us to the company itself. What does BigBear.ai actually do? This is part of the problem for investors. It's a black box company. It doesn't make a physical product or a consumer app. It provides AI-powered decision intelligence. In simple terms, it builds analytical software that takes in massive, complex data streams from battlefield sensors, border-crossing video feeds, or supply chain logistics, and provides clear, predictive insights for a human decision-maker. Its clients are primarily in the U.S. government, specifically the Department of Defense and the intelligence community. This is an incredibly competitive field. BigBear.ai is not just competing with other small contractors, it is in a direct knife fight with absolute giants like Palantir Technologies, C3.ai, and the massive incumbent defense contractors like Lockheed Martin and Booz Allen Hamilton. This is the core of the short thesis, that BBAI is a small fish in a shark tank and its technology is not unique enough to win the truly transformative billion-dollar contracts. The retail sentiment on forums across Reddit and X reflects this battle perfectly. You can scroll and find YOLO posts from 9 months ago when the stock was flying, right next to desperate posts from this week from investors with a $7 average asking if there is any hope left. The meme stock label has been a double-edged sword. It brought in a wave of new buyers and created the volume we see, but it also attracted the attention of short sellers who prey on companies with a valuation detached from their fundamental performance. So as we head into Monday's report, here are the two scenarios that will define the expectation versus reality framework. Scenario 1 is the bull case, where reality exceeds expectations. In this outcome, BigBear.ai reports a clear revenue beat. They announce that the U.S. Army contract disruption is firmly in the past and that revenue from Pangiam and new Navy contracts are accelerating faster than anticipated. Most importantly, they would raise their full-year guidance, signaling to the market that the turnaround is not just working, but gaining momentum. In this case, the 17.68% short interest would act as pure rocket fuel, and we would likely see a violent move upward as the bears are forced to cover, even if it only takes them a day to do it. Scenario 2 is the bear case, where reality falls short. BigBear.ai reports another revenue miss, or more likely a meet that is full of asterisks. They might show that while Pangiam is growing, their core legacy business is deteriorating even faster. They might maintain their guidance, but the market will interpret that as a sign of weakness. The cash burn might be higher than expected. In this scenario, the short sellers are vindicated. The $390 million cash pile will be reframed as a dwindling asset, and the stock will almost certainly break below its recent support and retest its lows. The narrative will be that the company is just a subscale government contractor that got lucky with an AI.